Hello and welcome to another update video about silver as we're heading into a new trading week. End of last week we've seen a little bit of an increase, a price increase before we headed into the weekend. We're still tracking on this chart here a 1-2 setup, which is generally a bullish Elliott wave setup. It would, if all goes well, result in a third wave rally higher to $30 plus. However, first of all, it needs to prove to us that a low is in, which it hasn't done yet, and I currently still expect it to go down lower. And the relevant support that we've got on this chart is the lower boundary line here of the yellow support area at $21.17. A break below that level will make it very likely that this 1-2-1-2 setup I just showed you, 1-2-1-2, so basically an impulse up, correction down, impulse up, correction down, that this will be invalidated, and it may morph into something like a larger wave 1 and then A, B, C, which comes down a bit lower, yeah? So there are still two bullish scenarios on the chart. It just takes a long time here to complete this correction. This is often what happens in the metals markets. Yeah, corrections take a long time. Silver and gold especially, because they tend to rally quite significantly and quite aggressively if they get their rally, and if we really move up, then they can really, well, rally quite aggressively, and that will then typically lead to a very, very long and boring correction, as you can see here. I mean, this correction started basically in May, right? So May till today, quite long, quite frustrating, very boring, but yeah, it is a correction here. A lot of overlapping price action here. That's what we're tracking. So in this current wave 2 correction, what's going on there? So my primary scenario is the following, that the price moved down in an A wave, and then we topped possibly in a B wave, and we're now coming down in a C wave. This is one possible interpretation. Another interpretation is that, yeah, we came down in an A wave. This B wave is going to unfold as a triangle, and then it's going to come down. But either way, it currently seems likely that this overall correction isn't over yet. And if I look at the idea that maybe a B wave topped here on the 30th of August, then we tracked in previous videos here the move to the downside as a C wave of the wave 2, which might need one more low to complete. In this C wave, we had a wave 1, a wave 2, a wave 3, a wave 4 now in the making, and one more low could happen. What is the resistance for this wave 4? That's what's important, because then we can see where the price might get or the price might experience a rejection. And this is typically between the 23.6 retracement and the 50%. So obviously we're just looking at the 38.2 FIB here, and the 50% FIB level already reacted to that level here at $23.25. And yeah, it could still go a little higher, but above $23.54, I have to assume that something different is going on, because then the price would move too high for still an unfolding C wave. Why? Because typically you don't want a wave 4 go beyond the 50% retracement level. Which scenario will then get more likely? Well, it would be the triangle scenario. So I would then first watch for a potential triangle to be unfolding here. For example, as an A wave, a B wave, a C wave, a D wave, and an E wave, which would then complete this B wave, and then we come down. Again, it's all part of this correction. It's all part of the same scenario. I think what's important to understand is, okay, the forecast is still lower. There could be one more imminent move down as long as the price doesn't break above $23.54. Yeah, but overall, not much new stuff to talk about. Hope you liked the update. If you did, please hit the like button, leave a comment and subscribe. And if you really like the content, then please check out the channel membership. Thanks a lot for watching. Bye-bye.